Alrighty, what's up, everyone? I know I haven't made a video in a really long time, but I just wanted to make a quick video to tell you guys how I identify like what trades I'm gonna take. Obviously, I post a lot of my trades on Instagram, so I've had a couple people that have asked me about. Oh, here we go. I've had a couple people that have asked me like, how do you know like where the market is gonna go next? So I just wanted to make a really quick video to kind of explain how I identify where the market is going. So yeah, let's get right into it. So there's two ways that the market is moving. The market is either moving up or we are moving down. When you hear people referring to the market as the market is currently bullish, that is pretty much saying that the market is moving up overall. Of course, that doesn't mean that the market is just shooting straight up because that is not, it's just not very likely to happen. Typically, when we're moving up, we do see days where the market is red, it's going down, but then it goes right back up, it's going down. So I'm going to explain to you guys how you could kind of identify where we are in the market. So if we're, like I said, if we are bullish, this is how you would identify that. So let's go to, which one is it? Okay, so it would be pretty much, so you have a bottom here, and then we create a new high there. Then we come back down here. We create a new low, push up, break above this previous high, and then we come back down, and then we create a new low that doesn't break below this previous high here. Then we push back up again, and then we kind of have this continuous pattern over and over and over again. So this to me would pretty much tell me that the market is overall going up. And the reason how I identify that is we have a low here, which is followed by a high, which is followed by a healthy correction, where the new low is now not, I repeat, it is not taking out this previous low. And then we move back up, where the new high here is now higher than the previous one. So although, yes, we are having days where the market is moving down, it is still going up overall. And we just see that continuously. A quick example, sorry, this is a super shitty chart. I do a shit ton of charting on this, but I can show you guys on SPY here because I don't really trade SPY as much. Um, as you can see here, yes, there are days, for example, where we are dropping, but overall we are moving up. So if I take a look at this here, we go up here, hit a high, go low, come back higher than we did previously, come back lower, not lower than we were previously, and then push up higher. Again, I would say to like right there, push up lower. So you can see that overall the market is going up. Yes, we are having these healthy corrections, but that is pretty normal in the stock market. If you think that the stock market is just moving straight up in a straight line, you are definitely wrong. So we were, as you can see, we were clearly in this huge bull run over the past couple of years that people have been talking about. I'm sure you guys hear about it all the time, but we finally are seeing some very, very, very bearish moves in the market. As you guys can see here, we hit a high here finally, and then we moved down to the lower point here, pushed all the way back up to this high, which is now lower than this high. And then we pushed all the way back down from here to about right there, which is now a newer low from this one. And then what happened these are just previous lines I've had. What happened after that? We pushed all the way back up to here, a new high, which is still lower than this one. And now we saw what we saw yesterday, which was this massive, massive drop, which took us to a new low, lower than the where we were at before here. So as you can see, we are now starting to make new lows and lower highs. So we should be moving down. So what I'm looking for is I'm technically trying to catch bearish moves to the downside. And the reason or the way that I identify that is obviously by using these trend lines here. Um, so pretty much to make it a little bit more simple and a little bit easier on the eyes, let me just draw out what I did earlier, but I'm going to do it the opposite way. So if we're moving down, we have a high here, go down, push up, go back down, push up, go back down, shift, go back down, push up, go back down. So this is kind of what is happening now. We're going down, pushing up, going down. We're creating those new lower lows, highs that aren't taking out previous highs. So that's pretty much what's happening now. So like I said, I am looking to catch moves to the downside. So if we know that we are moving down and we know that this is a new high and this is a new low, there should be no reason why you should be predicting a move to the downside when we are at a lower point. And then again, if we are moving, if we are trying to catch a move to the downside, you should not be trying to scalp like the calls in the morning. I recommend staying patient, which is what I found has paid off a lot more. Staying patient and you look for the market to push up and for it to test previous imbalances. Typically, what I use is the 15-minute fair value gaps, which I will show you guys how to find them right now. And then I look for us to go ahead and hit those areas, to respect them, reject those areas, and then I hop back down to the 2-minute chart where I look for a fair value gap to be created, and then I take puts with my stop loss being at the top wick of the first candle of the fair value gap. And then I target pretty much the breakup structure, which would be entering the trade here and trying to catch the puts all the way down to this lower low here. And then you could sell half of your position here and then wait to see if we do continue to push down. But a lot of times what will happen is we'll consolidate or we'll push up even a little bit and then just continue down. So I always recommend just entering here, getting the best entry that you possibly can to get almost no, or to get little to no drawdown when you enter. And then you target those structure breaks here. So that's pretty much how I identify whether I'm going to be taking calls or puts. Typically, if we're moving uptrend in an uptrend where we are pushing up, what I do is I look for calls. But right now that we're in a downtrend, I'm looking for puts, so shorts. Alrighty, so now let me give you a real life example of how I find the trade. It's going to be a trade that I actually took myself. So this is going to be a trade from yesterday. I can delete this now. Oops. Okay, so the trade that I took yesterday. So pretty much after the market closed, I hopped on the charts and I went ahead and did some charting. So what did I identify? So that would be today's Friday, Thursday. That would have been Wednesday night going into Thursday morning. So what did I identify on Wednesday? So as you can see, we are currently downtrending. So we went down here. That was Friday. That was then Monday. Came down here, pushed up here. And then I saw, so pretty much this is where the market closed on Wednesday, right? So I hopped on the charts after and I was like, what am I looking for here? Like, based off what I had just showed you guys previously, we went down, pushed up, created a high that was now lower than the previous high, pushed back down and pushed up. So, as I mentioned, I was like, okay, I'm going to wait for the market to open and see if we push up just a little bit more so I could try and get the best entry. And then I'm going to hope that we reject a 15-minute fair value gap around this area, which is lower than this previous high. And then I'm going to look to catch the move to the downside. And that's exactly what happened. This was a crazy, crazy move, to be quite honest with you. I didn't catch the entire move because, like I said, I usually look to take profits around here, which is the previous low. So that was only about half of the move. This move was huge, which is freaking insane, but it is what it is. Profit is profit, which is really, really good. But yeah, so pretty much that's what I was looking at on Wednesday afternoon. I noticed that we were on the way back up retracing when we were downtrending. So I was like, let me wait to get the perfect entry right here on a 15-minute fair value gap candle or a 15-minute fair value gap rejection, and then we could try and catch the move to the downside. So let me show you guys the 15-minute fair value gap that I found. So as you guys can see, when I'm on my charts, I am on the 15-minute one. And if we zoom in a little bit here, so 15-minute fair value gap, this was the rejection. And let's go down to here. Boom. There it is. This is the 15-minute fair value gap that we rejected right there. previously an inverse fair value gap. Boom. So what I did was I noticed that right there. I went ahead and drew it out, and I literally got the most perfect entry on this trade. It was absolutely amazing. I had no drawdown on it whatsoever. So pretty much I used that fair value gap, and the reason I used that one in particular was because if you can see here, obviously this wasn't on the charts yet because that day hadn't happened. So I realized that there was a fair value gap there. You guys can see here, we created an inverse, came back down, retested it a couple times, respected it, retested it again, respected it. So I know that's a very, very important fair value gap. If we actually do this and take it to the left side, it did the same thing a couple times on this area here. And I could keep dragging it and it'll keep doing it along thing. So that means that that is a very good imbalance there for an entry for either short or puts, depending on how the market, sorry, short or calls, depending on how the market is moving. So pretty much on Thursday, what happened was the market opened here, chopped a little bit. I noticed it tapped into it once here, but I usually try and wait a little bit before the market opens because I noticed it was chopping too. So this is on the 15-minute. Like I said, I use this to find where I'm gonna enter, and then I hop on the 2-minute to look for those fair value gaps here. So switch back into that 2-minute time frame here. Boom. This was on Thursday morning. So you guys could see this price action right here. Terrible. I would never ever like want to be in a trade there. So that's why I waited. Notice we tapped into it there, which was honestly not a bad entry. But I decided to thankfully wait until we create a fair value gap because that was not a fair value gap anywhere there. And we did it right here. So where is it? Where is it? Where is it? I believe it was that one actually. It was this one here. Boom. So I noticed we created this fair value gap here. So I was like, okay, let me go ahead and wait for us to kind of come back up here, touch into this area where we had previously respected the 15-minute fair value gap, which is this big gap here. So I literally entered around, I think right here. And then boom, just caught the whole move down to the downside there. Pretty much entered around here, short position. Entered, I believe I entered around like right there. Stop loss was, I believe, here. Shit. Sorry. Right there. And then take profit for me was actually right. It was around here with runners going down to the next break of structure there. But holy shit, as you guys can see, that was only part of the move. But hey. Green is green. Like I said, you never expect the stock to take out like a shit ton of like levels here. Kind of how we have a level there. There's a level there. Like it's not very likely that that happens often because we do have buyers present here. But as you can see, that thing did not care. It just ran all the way back down there. So that's pretty much how I identify the trades that I am looking for. Um, Super simple, super simple strategy, but it's super effective. For example, yesterday or today on this one here. Oh my God, that was such a nice play. Wow. So, for example, here, the top onto the 15-minute chart again, so I could go ahead and try and look for an entry, correct? So we can see that this is we can see that we pushed up, pushed down, pushed up, pushed down. So we're moving down, right? Pushed down, pushed all the way down here. And then we were currently right. This is, I believe this was market open, was it? Yeah, it was. Okay, so what I predicted was that we were going to come down to that 664 level area. We were going to test this 15-minute fair value gap that I have drawn out there and then reject and hopefully catch the move to the downside. So what happened when the market opened? Let's take a look. So boom, this was yesterday, massive move to the downside. After hours market open, we have this huge rip up to the upside, exactly to that 664 area. And then boom, let me show you guys the 15-minute fair value gap right there. Make it exact. So it was right there. Boom. You guys can see there's a fair value gap, so I was expecting us to push up to that right there, retest, hopefully reject, and then we could try and catch the move to the downside once again. What happened at market open? We came up, have this little rally up here, came up to 664. Market's still open, as you can see, 664, and then we are going to have back down to that 2-minute chart, look for a 2-minute fair value gap, and for us to reject it. So pretty much we pushed up to that there. And then this didn't give me enough confidence just because this fair value gap here is freaking huge. Like I'm not going to enter a trade here and have a stop loss that's like $4. So wasn't going to use that one there. And then as you can see, right as we got to the top of that 664 level, we created the first one here. Boom. So ideally, if we use this one here, you would have got the best entry. Like we created the fair value gap, 1, 2, 3, chopped down a little bit, came back up, retested it. This would have been your entry. Boom. You enter here. You're entering for puts, so short position. Let's take a look. You would enter here with your stop loss being at this top wick there. Boom. You would have probably got a little bit of drawdown, which was followed by a major push to the downside. And then your targets would have been a previous breaker of structure, which is you could either target that one right there, or if you really want to get greedy, you could target the bottom of it. But I would probably use that one, which is pretty good. 664 to around 6660. A $4 move, that's literally about 200 to 300% play. So if you put in 1,000, you would have got 3,000 back. So pretty simple strategy. 15-minute identifying market structure on the 15-minute time frame, hopping onto the 2-minute to actually reacting to those 15-minute fair value gap movements and targeting previous breakup structures. So super simple but super effective. Yeah, if you guys have any other questions, please let me know. I try to make it as simple as possible. What I really want you guys to take is how to identify whether we're moving up or down. So like if we're in an uptrend or if we're in the downtrend, and whether you should be looking at taking puts or taking calls. That's really the most important thing that you should be taking from this video. Alrighty, y'all. I hope you guys have a good day. Let's see. So